Your credit score is a three-digit number, a crucial piece of your financial identity. It's a figure that lenders and other financial institutions use to assess your credit worthiness. That acts like a financial report card for lenders, providing them with a quick snapshot of how you've handled credit in the past. Think of it as a grade that reflects your financial responsibility. It's calculated by credit reference agencies, also known as credit bureaus, based on your borrowing history, a comprehensive record of how you've managed your debts and credit accounts over time. This history is the foundation upon which your credit score is built. Credit cards, including how often you use them and whether you pay on time, loans such as personal loans, auto loans, and mortgages, and even some bills like utilities and phone bills, can impact your credit score, especially if they go unpaid and are sent to collections. A higher score means you're seen as a lower risk, indicating to lenders that you're likely to repay your debts as agreed, making it easier and cheaper to borrow money. This can translate to lower interest rates on loans and credit cards, saving you significant amounts of money over time. Key factors include your payment history, which is arguably the most important factor, how much credit you use compared to your limits, your credit utilization ratio. Keeping this low demonstrates responsible credit management and the length of your credit history. A longer credit history generally indicates a more predictable borrowing pattern. Lenders want to see on-time payments, consistently made over a significant period, and responsible use of credit, showing that you can manage your debts effectively. Having a mix of credit types can also help your score, as it demonstrates your ability to manage different kinds of debt. There isn't just one credit score, it's important to remember that. Different lenders use different agencies like Experian, a major credit reporting agency, Equifax, and TransUnion, which are also key players in the credit reporting landscape, each with their own scoring system. These systems may weigh different factors slightly differently. Your score might vary slightly depending on which agency's report is being used, but the habits that build a good score are the same across the board. Consistency is key when it comes to building and maintaining a healthy credit score. In short, your credit score summarizes how well you manage money and repay debts. It's a reflection of your financial responsibility and reliability. It helps businesses decide if they'll lend to you and what rates to offer. A higher score often unlocks more favorable terms. A good score can save you money and open doors to better financial products such as premium credit cards with rewards and benefits. Understanding your credit score is the first step to taking control of your financial future. It empowers you to make informed decisions about your finances. Focus on paying bills on time, every time, keeping credit balances low, relative to your credit limits, and building a positive credit history. These are the cornerstones of a good credit score. Remember, your score is a snapshot. Good habits today build a better score tomorrow. It's an investment in your future financial well-being. Check your score regularly and know what factors influence it. This awareness will help you make informed decisions. With the right habits, you can improve your score and your financial opportunities. A good credit score can open doors you never thought possible. Mastering these basics sets you up for smarter financial decisions. It's about building a solid foundation for your financial future. Take charge of your credit score and unlock your financial potential. It's the key to a brighter, more secure financial future. In 2025, your credit score is more important than ever. Lenders are using more data and advanced algorithms to assess risk, making your score a key factor in their decisions. Economic uncertainty means lenders are extra cautious, so a strong score sets you apart. Open banking now gives lenders a deeper look at your finances. Your spending and saving habits can influence lending decisions alongside your credit score. Regular, responsible financial behavior matters more than ever. New scoring models may include rental payments and subscriptions, making your everyday habits part of your credit profile. More credit applications are processed online, often automatically. A low score can mean instant rejection, so managing your score is crucial in this digital age. Stay informed about changes in credit scoring and adapt your habits accordingly. In 2025, your credit score is your financial passport. Protect it. Responsible money management now impacts more areas of your life. Keep your score strong to access the best financial opportunities. The future of finance is data-driven. Make your credit score work for you. Your credit score is the gatekeeper, the key that unlocks or locks away financial opportunities. It directly impacts your access to loans, credit cards, and mortgages, shaping the financial landscape available to you. A good score significantly boosts your chances of approval for these essential financial products, and it doesn't stop there. A higher score gets you lower interest rates, saving you a substantial amount of money over the life of the loan. With a strong score, you qualify for better credit cards. Think premium cards with exclusive benefits. These cards often come with lower rates, higher limits, giving you more purchasing power, and lucrative rewards programs that can put money back in your pocket. On the other hand, a poor score severely limits your options, restricting your access to favorable financial terms. This often leaves you with high-interest products that can be difficult to manage, or outright rejections that can be disheartening. When it comes to mortgages, securing a home loan, your score is absolutely critical. Lenders are understandably cautious with such large loans, assessing risk meticulously. And even a seemingly small difference in your score can translate to thousands of dollars more in interest payments over the life of the loan, significantly impacting your long-term financial well-being. In the worst-case scenario, a poor score could mean no mortgage offer at all, preventing you from achieving your dream of homeownership. Think of your credit score as your key to unlocking better borrowing conditions and more favorable financial terms. The better your score, the more choices you have, giving you the power to select the options that best suit your needs. Conversely, a bad score can lock you out of these opportunities, limiting your access to credit when you need it most. This makes borrowing significantly more expensive, or in some cases entirely impossible, creating a significant financial burden. Understanding this crucial link between your credit score and your financial opportunities empowers you to take proactive action to improve your credit health and take control of your financial destiny. By focusing on building a strong credit score, you pave the way for a brighter and more secure financial future. Don't underestimate the power and far-reaching impact of your credit score. It significantly shapes your financial options and influences the choices available to you. Therefore, it's essential to take deliberate steps to build and protect it, ensuring you have access to the best possible financial opportunities. Cultivating the right financial habits today, such as paying bills on time and managing credit responsibly, will translate to more financial freedom and greater savings tomorrow. Your score is your financial leverage. Use it wisely and strategically to your advantage. Make it work for you, opening doors to opportunities rather than working against you and hindering your financial progress. Your credit score affects more than just borrowing. Landlords and letting agencies often check your credit before approving a rental. A poor score can mean rejection or higher deposits, while a good score smooths the process. Utility companies and mobile providers may also check your credit. Bad credit can mean upfront costs or refusals. Some employers, especially in finance or roles handling money, check credit reports as part of their hiring process. A strong credit history can boost your job prospects, while a poor one may raise concerns. Employers need your permission to check, and they're looking for signs of financial distress. Maintaining a healthy credit profile removes barriers to housing, services, and even certain careers. Good credit is about more than money, it's about opportunity. Stay on top of your credit to keep your options open. Your score is your reputation, protect it. It can open doors far beyond the bank. Does your credit score affect your tax bill? The answer is no. HMRC calculates your tax based on your income, not your credit score. Credit reference agencies don't share your score with HMRC, and your tax payments don't affect your credit score. These are two separate systems. Your credit history and your tax obligations don't overlap. Even if you have debt problems, your tax bill is set by law, not by your credit score. Improving your credit score won't raise your taxes, and a poor score won't lower them. Focus on managing both areas separately for clear financial planning. Keep your credit and tax matters distinct for peace of mind. Let's take a moment to compare two different financial scenarios. We'll explore how credit scores can significantly impact your life. Meet Sarah and Ben. We're going to see how their credit scores directly impact their real-life experiences and opportunities. Sarah has cultivated a good credit score because she consistently pays her bills on time, every time. She also keeps her credit card balances low, demonstrating responsible credit utilization. As a result, she easily gets approved for loans and credit cards, often with incredibly favorable interest rates. When she needs a car loan, for example, the approval process is quick and painless. More importantly, she benefits from paying significantly less interest over the life of the loan. Renting a flat is a breeze for Sarah, and setting up essential utilities is a straightforward process free from complications. Ben, unfortunately, is burdened with a poor credit score. Consequently, he frequently faces rejections when applying for loans. This often forces him to resort to expensive lenders with unfavorable terms. He even struggles to secure a simple mobile phone contract. Ben also finds himself paying significantly higher security deposits when trying to rent an apartment. As a result, everyday life is considerably more stressful and financially burdensome for Ben. The difference between Sarah and Ben's experiences is stark and clear. A good credit score opens doors to opportunities and ultimately saves you money in the long run. Conversely, a bad credit score creates unnecessary obstacles and financial strain. These examples vividly illustrate just how profoundly your credit score can affect your daily life, from the mundane to the significant. It also plays a crucial role in achieving your long-term financial goals. Use this comparison as motivation to take proactive steps to manage your credit wisely and responsibly. Cultivating good financial habits today will undoubtedly translate to fewer financial headaches and greater peace of mind tomorrow. Remember, your credit score is a powerful financial tool, so take control and make it work to your advantage. Learn valuable lessons from the contrasting experiences of Sarah and Ben, because your financial choices today will inevitably shape your financial future. Strive to build good credit, as it provides you with greater financial flexibility and peace of mind. Don't let a poor credit score hold you back from achieving your financial goals and dreams. Want to improve your credit score? Start with the basics. Pay all your bills on time. This is the biggest factor in your score. Set up direct debits to avoid missed payments. Keep your credit utilization low, ideally below 30%. Pay down existing balances and avoid maxing out cards. Check your credit reports regularly with all 3 agencies. Dispute any errors you find, they can drag your score down. Limit new credit applications, too many can hurt your score. Use eligibility checkers to avoid unnecessary hard searches. Consistency is key. Good habits add up over time. Take control of your credit and watch your score rise. Small changes can make a big difference. Building good credit takes time, but there are smart ways to start. Register on the electoral roll at your current address. It helps lenders verify you. Consider a credit builder card for small, regular purchases paid off in full each month. Manage existing debts responsibly and contact lenders if you're struggling. Proactive communication is better than letting accounts default. Avoid closing old, well-managed accounts. They help your credit history. The longer your history of responsible credit use, the better. Keep old accounts open if they're not costing you. Every positive step builds your credit profile. Consistency and responsibility are your best tools. Start building your credit story today. Achieving a good credit score is just the beginning. Maintaining it is a lifelong habit. Budget effectively so you always cover bills and repayments. Review your budget regularly as your circumstances change. Monitor your credit reports at least once a year to catch errors or fraud early. Major life changes, like moving or changing jobs, can affect your finances. Plan ahead and avoid new debt during uncertain times. Build an emergency fund for unexpected expenses. Be prudent with new credit. Only borrow what you need and can afford. Understand all terms before signing any agreement. Informed decisions protect your score and your future. Financial health is about consistency and caution. Good habits today mean stability and peace of mind tomorrow. Keep your credit strong for lifelong financial freedom.